This is your LMAX exchange technical update for Tuesday, January 24th, 2017. Euro dollar. So while the euro does remain confined to a downtrend with it holding below that December peak at 108.75, this rally that we've seen into 2017 is compromising or threatening a potential break of that 108.75 December peak. If we see a push above that level, it could open the door for a more significant upside and a more significant potential structural shift. In the interim, if we do not take out 108.75 or we can't establish above that level, there is risk for another topside failure and lower top ahead of the next downside extension back towards the recent 14-year low at 103.41, below which guards against that critical level at parity further down. Sterling dollar. So cable has seen some impressive gains over the past several days, with the market now taking out some key resistance at 24.33. This does suggest the potential for this rally to extend up towards a previous base at 127.96. The 127.75 level should also be noted here. That comes in from the high from the 6th of December, this high right here. A break above that level and then clearing that 27.96 previous base sets up the possibility for a major double bottom, which would project gains well back towards the 135 area. Again, it's premature to start getting overly bullish this market. We still are confined to a broader downtrend, and we could see a topside failure at any moment. At this point, though, we need to see a break back below recent support in the 2250 area to put the immediate pressure back on the downside. Dollar yen. So dollar yen continues to extend its declines off recent multi-week highs at 118.67. There is risk for a fresh drop now if the market takes out some support, which comes in around the 112.55 area, without opening the door to initial previous resistance in the 11.45 area, and then potentially exposing a move back towards the 110 area further down. Ultimately, this market should be supported into dips towards the 110 to 111 area in favor of the next higher low. But at this point, if we do take out some support in 12.55 area, it could open a measured move down towards the 109.50 to 110 area before the market looks to carve that next higher low for a bullish resumption back above 118.67 and through 120. Euro Swiss. So Euro Swiss has been consolidating in very tight ranges over the past several days, but overall the pressure here remains on the downside, and there is risk for a drop to retest the 2016 low at 106.24. Aussie dollar. So Aussie is now finally stalling out or showing signs of stalling out after breaking up all the way to above 75 and closing in on 76. But overall, this market is very well capped into rallies over the past several months. Look for a lower top here ahead of a resumption of declines back towards the 71.45 medium-term support. Dollar CAD. So dollar CAD is back in the middle of recent high-low range. At this point, though, the overall structure continues to favor the top side, and any dip should be supported above 130 in favor of the next push above 136. Kiwi dollar. So Kiwi's showing signs of topping out off that 2016 high, just shy of 75. And so this rally is really classified as corrective, with the market seen putting in a lower top somewhere between now and 74 ideally. Only back above 74.86 would compromise this outlook. And again, rallies should be sold in favor of that next downside extension towards medium-term support at 66.76. SPX 500. The S&P 500 is stalled out off recent record highs, but at this point the pressure continues to be on the top side, and there is risk for a fresh push beyond the recent 2280 highs and through 2300 further up. At this point, we would need to see a break back below some recent support in the form of that 30th of December low around 2280, 2232 to take the immediate pressure off the top side. If we do see such a break, that would trigger a double top formation and accelerate declines. Gold. So gold continues to be very well supported on dips over the past several days, since basing out just shy of 1100 at 1122 area. The market continues to show signs of a longer term base, and we could expect to see fresh upside over the coming days and weeks that eventually takes this market back towards the 2016 peak at 1375. Any setbacks now should be very well supported ahead of 1160.